We got stocks even right now. No bias in the market this morning after yesterday's big drop. Trying to figure out what to make of it and if we're shell-shocked right now. Maybe we are. Jay Woods joins from Freedom Capital Markets, Chief Global Strategist at the New York Stock Exchange. Jay, good morning. Thanks for being here.
Hey, good morning. It's a day to roll up the sleeves, take off the tie, and get to work. It should be fun.
What do you think? We got one print JOLTS coming out later this morning. What other news flow do you see that could give us a catalyst?
Yeah, well, Trump will be speaking at the White House with a bunch of CEOs, so I expect that to be a little rosier. We may get a little bump from that. Let's see how that goes. I think we're grasping at straws when we're looking at each individual data point like JOLTS, or we focus once on the beige book. I'm like, all right, let's just focus on the bigger picture here. I think that CPI number tomorrow is what traders are really going to watch the most. If that comes in a little hot, then this sell-off could really be rough. And then we're watching news out of Washington. I know from a market standpoint, when you have a shutdown, a government shutdown, which could go into effect at midnight Friday, it could cause a little more angst. But historically, these are times to buy. We've gone through it with Trump, and we had a big sell-off in 2018 with a tariff uncertainty in tariffs, a trade war brewing, and a government shutdown. We sold off 8%, and then we rallied 10% the next week during the shutdown, which lasted 35 days. So the headline risk that we're dealing with right now is still, front and center, and the way this market is already turned in the pre-market gives me pause to think we're going to retest yesterday's lows in the S&P 500, and we could have a little bit of a washout. So I'm waiting for an opportunity to buy this dip because it could accelerate today.
I like that thought there about tomorrow's inflation. The last thing we want to see are bonds start selling off in the middle of this. And this morning's action already not terribly encouraging. But Jay, tell me about yesterday, because that was a pretty nasty version of what had been a stair step down. Instead, yesterday we had finally a real big move. Did it look capitulatory at all in your mind, or did it look like we were just opening room to the downside?
It had a feel that we could capitulate, and then we rallied at the end of the day and came off the lows. There was no, there's anxiety, there's angst, but I wouldn't call it fear panic just yet. One big thing happened yesterday. Technically, we broke that 200-day moving average, and that caused algos on top of other people who are just looking to lock in profits of some of these big names to rotate into safety. Not every sector was down yesterday. We saw staples catch a bid. We saw safe havens in some of these healthcare stocks do okay, high dividend yielding stocks. So people are looking for bargains and safety. But we didn't, to describe yesterday as panic. No, it was slow, it was steady, and we bounced a little at the end of the day. So we haven't had that capitulation. Watch the VIX. The VIX is around 28 now. I want to see that over 30, and that will tell me, okay, this could be a little more of a panic time. And when you sense that panic, as a trader, as an individual investor, you don't want to look at the 401k. You just want to, tighten up the bootstraps and put in some bids and get ready to buy some stocks that will be on sale.
To your point on vol and VIX at 28, you don't really hang out here usually, not a spot that you spend a lot of time. You're either going to the moon or you're going back down. So I guess the second half of this week could be a pretty big determining factor if this is a sort of a routine sell-off type correction or turns into something nastier, bigger.
Yeah, well, I think in the grand scheme of things, this is more of a routine sell-off. But when you live through it and you have the headlines that we're dealing with, it does not feel anything like a routine sell-off. But we do have 10% retracements on average once a year. We haven't had one in 16 months. 5% corrections a year. So S&P 500 got down 9%. I believe we will officially hit correction territory on one more leg down. And then that VIX, we remember back in August, the Japan yen carry trade. Who knew that would take us to one of the highest VIX of all time where we spiked to 60? It was short-lived. If we see that get to 30, 35, to me, that's when you want to dig in and buy it because it's getting overdone. We don't stay at an elevated VIX for an extended period of time. This sell-off is now in day 14 from our peak. Usually these sell-offs last anywhere from 20 to 30 days. So we're getting closer to a bottom and definitely a tradable bottom.
Okay. When you talk about a tradable bottom, Jay, do you think get the bounce back? Let's say let's say that yesterday was the low. Let's just go with that for hypothetical sake here, because we're trying for a little positivity this morning. Do you buy the stuff on the upside that led us to the downside? Because what we've been doing so far has been rotating. People have been buying international stocks. People have been buying defensive trades. Yeah, up until yesterday, they were holding in stocks like Apple that seemed to be lower beta versions of tech. So do you think that's the stuff that bounces back, or do you think this might be kind of a tougher grind out from the rest of the market?
Well, we could see some V-bottoms where you have that short sell. Like Tesla's a perfect example, down 50% from the high. I would not advise anyone to just jump in there now, try to catch that low. It's like trying to catch a falling knife. It's very dangerous. But there will be tradable rallies, and when it rallies, we're talking 20, 25% upside in a matter of days. But trying to pick that bottom, no. So what I advise our clients and people that talk with the Freedom is just to buy slowly in quality names that you believe will eventually bounce back. But this will take time. When we do rally, look at the S&P 500. We broke the 200-day moving average. We're finally below it. Now we want to get back to it. I believe we'll get back to that level, and then we could churn there for a little while. So to me, I want to see that. I use the 200-day as a barometer of health, and we're seeing more stocks under the 200-day moving average. Once we get above 50% there and we can kind of level off, then yeah, I'll give the all clear. But right now, trying to pick that bottom, I don't advise anyone to do it. You want to leg into trade. So if you have $1,000 to invest, buy 300 here, 300 a little lower, 400 at a crazy level just in case it gets there. NVIDIA, it looks like it has a date with 100. That's another 6% lower. So if it gets there, have a bid in there. And then if you buy it, then have your game plan. So to me, this is when you just have that shopping list ready and you go. But I don't think we're out of the woods just yet, but we're closer to the end than we are to the start.
All right. I like that. Encouraging thoughts. Jay, 1 minute left. Anything else stand out? I got Bitcoin up 3%. I got the dollar down 0.5%. Anything outside stocks screaming buy or sell to you?
Stocks, no. I mean, equities are my specialty, and I'm digging deep for, where we're seeing that rotation. You mentioned foreign stocks. They've been on a tremendous run. Some of those charts look phenomenal. They're just starting to break out. But I still believe over time the U.S. market is the best market to be in. And once we get through this next week or so, things will stabilize. Will we get back to all-time new highs anytime soon? It's going to take a little while. This is one of those years in a secular bull market where we see a lot of sideways action, a lot of churning. And we are not going to go up 20% every year, but now those big names, those Amazons, those Googles, those Apples, as you mentioned, if they discount any further, I don't think we've seen an opportunity like that anytime recently to get into big names like this. So to me, there are some buying opportunities, and then the material sector is one that looks pretty strong to me. And overall, the top three names there, Sherwin-Williams, Linde, and Ecolabs, all like on the positive side.
Nice, love it. All right, cool. Thanks, Jay. Appreciate the chat.
Thank you.
Nice way to get us started here this morning. Jay Woods, Chief Global Strategist of Freedom Capital Markets from the New York Stock Exchange.